Hi, welcome to price action analysis on Aussie USD as it's breaking out from a bullish wedge formation. I'm Janne Muta, the Chief Market Analyst for TO Markets, and I would like to remind you that even though we do hit targets all the time, we do not provide investment advice. So you should take a screenshot of this disclaimer and only proceed watching the video if you agree that we provide only educational and marketing material. None of this material is for investment advice purposes or recommendation, etc. So if you agree, we can go back to the presentation, and if you can hit the subscribe and like buttons, we do appreciate that. Okay, let's take a look at the chart and see what levels and what price action here is interesting and relevant. I'm seeing on this chart basically the market coming down and following this trend line until now. We are basically breaking out from a bullish wedge. Bullish wedge refers to a formation where you have the formation pointing to the downside, but at the same time the second pivotal point here is closer to the downward sloping trend line. It's closer than the first. So it basically tells you that the strength of the bears is fading. And now the market has broken outside of this wedge. So let's see what levels are relevant here. Basically, first of all, this is obviously the next big hurdle that the bulls have to overcome if they intend to really take this market higher. And the most important support at the moment is down here at 70.17. So the next level going up from the low is 70.41. And at the moment, the market is finding support from these highs combined with the market has retraced back to this wedge, the upper end of the wedge, and these highs here. And some buying has taken place there. So now, if the market moves higher from here, I think, and one more thing I need to mention here is really the Fibonacci's. We have 23.6 Fibonacci retracement level that was penetrated, and now market seems to be finding support there. But at the same time, we need to be careful. If we have a spiky candle like this, sometimes it's a sign of loss of momentum. And now we have only about 5 minutes before this candle is closed. So it really depends on how quickly the market now recovers and moves higher, or whether we'll have an exhaustion candle here pointing to lower prices. Obviously, sometimes these exhaustion candles are wrong, otherwise this game would be too easy, but it's just a technical factor that you need to take into account and then incorporate it into other technical factors that you are paying attention to when analyzing a market. But anyway, we are looking for long trades above this low yesterday, and basically the first target is up here. We're looking at the 38.2 Fibonacci retracement and this high, and this makes sense as the target 1. Target 2 up here. Basically, we have the 61.8 Fibonacci retracement and these lows. So I think that looks like a decent target for this, decent second target, that is, for this move. And also, if we measure the width of this formation and then project that width from the breakout point, I think we get a sort of confirmation that maybe this is something that is likely to happen. Now, obviously, we don't know the future and nobody knows if the market is going to first retrace lower, but these are the key levels and these are our targets at the moment. So maybe you want to pay attention to these as you trade. So until the next video, I hope that you trade safe, never trade without stops, and try to keep your position sizes reasonable. Thank you so much for your time.